How will the RMB-USD exchange rate evolve under Trump's new policies? When discussing the RMB-USD exchange rate, it is worth noting its dramatic fluctuations since the Chinese Communist Party, CCP, took power in 1949. At its highest in 1949, $1 exchanged for 42,000 renminbi. At its lowest in 1980, it was just 1 renminbi and 53 cents per USD. At that time, China's foreign exchange reserves were negative, and the exchange rate had little real impact on its economy. It was more symbolic than practical.
However, as China's economy grew, with increased foreign trade and investment, the exchange rate of the RMB gained significant importance both domestically and globally. Since 1994, the RMB-USD exchange rate has mostly stayed between 6 and 8. Unlike in market-driven economies where exchange rates are determined by the invisible hand of the market, China's exchange rate is tightly controlled by its central bank, the People's Bank of China, PBOC. This means RMB exchange rates, whether onshore or offshore, are not market-based but instead manipulated by the central bank.
A notable example of this manipulation is the CCP's long-standing policy of keeping the RMB below 7. Whenever the exchange rate threatens to appreciate or depreciate beyond this threshold, the PBC intervenes using its massive foreign exchange reserves to stabilize it.
For instance, since the 2015 exchange rate reform, the offshore RMB has occasionally breached 7, but each time, the PBOC stepped in to pull it back, using its reserves as leverage. Even in the offshore market, traders find themselves up against the Chinese government. A notable example is George Soros' attempt to short the Hong Kong dollar in 2019. When it became clear that the PBC was the ultimate counterparty, the operation resulted in massive losses for Soros, reportedly amounting to $2.4 billion, after the Hong Kong Stock Exchange halted trading and trapped his short positions. Why is 7 important? The exchange rate of 7 renminbi per USD is a carefully calculated balance of interests. For an export-driven economy like China, a weaker RMB makes its goods cheaper and more competitive globally. Thus, the CCP resists RMB appreciation, even under accusations from the US of currency manipulation.
During Trump's first term, the US imposed tariffs on Chinese goods. In response, the RMB depreciated by approximately 10%, offsetting the cost increase from the tariffs. Despite the higher tariffs, U.S. purchases of Chinese goods grew by about 12% annually in 2018 and 2019. However, this came at a cost to Chinese exporters, whose profits and revenue declined, essentially making them bear the burden of Trump's tariffs.
Now, with Trump proposing a 60% tariff on Chinese imports, the PBC faces new challenges. Early indications suggest the PBOC may adjust its threshold to between 7.5 and 8 renminbi per USD. However, sustaining this level will be difficult due to broader economic pressures. If the RMB depreciates significantly, import costs, Chinese importers and heavily indebted entities like airlines, property developers, and state-owned enterprises will face mounting costs. Capital outflows, both domestic and foreign investors, may move their capital abroad, further destabilizing China's economy. Asset devaluation. As the RMB weakens, RMB-denominated assets, including stocks and real estate, will lose value, exacerbating market instability. The PBOC's historical interventions provide some clues. For example, after sustained depreciation following the 2015 exchange rate reform, the PBC acted decisively in January 2017, deploying its foreign exchange reserves to appreciate the RMB from 7 to 6.8 within just 2 days, crushing short sellers. While exchange rate manipulation has helped China maintain its export competitiveness, it has not come without costs. China's $3 trillion in foreign exchange reserves are finite and cannot withstand endless interventions. Moreover, Trump's renewed focus on restricting Chinese exports includes measures beyond tariffs, potentially rendering currency manipulation insufficient. Historically, the RMB-USD exchange rate has had no theoretical limits, ranging from $1 to 42,000 renminbi at its highest to 1 renminbi at its lowest. Such extremes were symbolic, reflecting periods of isolationism or artificial pegging.
Today, understanding the trajectory of the RMB-USD exchange rate requires a deep understanding of the CCP's mechanisms of control. As China navigates increasing economic challenges both domestically and internationally, the future of the RMB may hold even greater significance in shaping its economic and geopolitical landscape.